Hi, good morning. Hi, everyone. Good morning. You can hear me very clear and sound. Hi. Okay. I just want to hear someone before I will proceed. Can you hear me? Okay, I welcome you to this class this morning. I can see we are quite many today. To maintain average noise, I will mute all of us to enable us have a very sound communication. I hope you can hear me very clear.
Yes, I can hear you.
Okay, can you hear me? Okay. I think you should have a very good internet, and after this class, we will make it available on YouTube, so you can also go back to our YouTube channel and play it over and over again. So I will mute all of us. So anytime I want to take question or you have a question to ask, you can raise your hand. I will unmute you. Then you can ask me the question. I hope that'll be fine. Okay. The topic this morning is how to understand fundamental analysis. Someone may wonder, why is it that anytime after making a sound technical analysis that the market will not work according to the person's plan, and the market may suddenly revise? It is the work of fundamental analysis which is superior to technical analysis. So for the sake of time, I want to make it a very fast and short so that I won't take much of your time. So we're just going to discuss today about a few fundamental things that you may need to know, and with time you'll be able to master it. I make my note to be very, very short and easy to understand, and possibly how to implement them, because it is one thing to know fundamental analysis, and it's another thing to apply them, to know how to apply them in your trades. As you can see, fundamental analysis here is a study of how global economic news and forecast affect financial markets. That is fundamental analysis. How the news, for example, Donald Trump may just come up with a statement and the market will rebound or will turn upside down. You could see some other economic news. For example, COVID-19 this time around is another event that is affecting the market. I'm having a chart here. So please, if you have not used Zoom, I think you should have your time to familiarize yourself with it. It's not something I can answer you here. Someone is asking me, I have not used Zoom before. How can I use it? You just have to follow the instruction and get yourself connected. You need to enable your audio, and possibly if you want to connect to your video, enable your video if you want us to see you. And you also need to maybe connect to a mouthpiece or earpiece so to enable you hear us very clear. Unfortunately, if you are using a device that is not supported that does not have a mouthpiece or audio enable, you may not be able to hear us, but probably you may have to watch the demonstration. Now, let me go back to the topics. Technical analysis is the study of price action, that is chart, to predict market movement. That's all about technical. Technical analysis traders, they only trade based on the market reaction, price reaction, what they see from the chart, what they are seeing from the technical chart. That's what they use to predict, maybe trying to observe the support level, resistance level, try to understand the reversal level, and some other signs that could trigger the market to go one direction or the other. That is technical. So technical trader rests on presumption that price that were important in the past will be important again in the future. That is support and resistance. So technical trader use all these things, trying to follow the market based on the past performance want to use it to predict the future performance. Now, that is a very nice concept of trading, but why is it that anytime there's a sound analysis that way, market will always don't always work according to technical analysis? It is because of fundamentals. Fundamentals always affect technical, and it is more superior to technical. Let me answer your question. Ihoma gift. I have not used this Zoom app before and does not know how it works. How do I connect to video? Please enable your audio. Enable your audio, Ihoma. Enable your audio. So now, let's proceed. Let's try to understand the fundamental analysis. You can see that in fundamental news, is all about giving news about the economic system of a particular currency you're trading. Now, I say in my note here that a strong economy will definitely trigger a high demand. When the economy of a country is very when the economy of a country is very strong, it will definitely trigger the demand. People would like to invest in that country, which is going to increase the demand of investment in that country. And it's definitely going to give rise to a strong currency. And a strong currency will rise against the weak currency. This is trading for you. When there is a strong economy, it will trigger a higher demand, and a higher demand will trigger a higher currency. That's a strong currency, sorry. And a strong currency will rise against a weak currency. Now, the same thing can be said when there is a weak economy. It will become a low demand. Many people won't like to invest in that country. There may not be much economic activities because the economy probably is weak. And a weak economy will definitely give birth to a weak currency. When the economy is weak, the currency must be weak too. And a weak currency will fall against a strong currency. This is fundamentals. And it's the truth about what we are trading. When you have a weak currency, it will definitely going to be attract weak demand, and a weak demand will definitely result to a fall of that currency. Now, what is fundamental analysis in other way? Let me also try to emphasize more here. For example, if Australian economy is gaining strength, for example, if the Australian economy is gaining strength, then the Australian dollar will increase in value relative to the other currencies. So when the economy is strong, economy of a country is strong, the currency of that country is going to be strong also, and it will be strong against any other weak currency that you may want to pay that currency with. And that is another example of a fundamental analysis. Now, let's take note of key takeaways factors for strong economic growth. What are the factors that can determine that a country economy is going strong or is going weak? I outline about 8 factors for the sake of this class. In subsequent class, I will be bringing in more factors that you may need to understand of the factors that trigger a higher or a strong economic growth. One of them is gross domestic product, GDP. Every country in the world has GDP. There's no country in the world that does not have a GDP product or a GDP rate. Is GDP, the gross domestic product. Then what is GDP? What is gross domestic product? You can see from my note here, the GDP reports one of the most important of all economic indicators. It is the biggest measure of the overall state of economy, including per capita report of individual. It has to talk about the overall economic activities of a country, including per capita, the amount of money people earn per day, or the amount of money people are paid per day. For example, in a country where an individual earns average $5 a day, and another country, individual in that country earns average $1 per day. The country that has $5 per capital individual earning is going to be strong, and possibly going to be stronger than the country that the individuals earn $1 per day. That is gross domestic product for you. It is one of the most important economic factor. So any country that you see that the GDP is going strong, Ezekiel, I will answer you later. Let me finish my explanation. I will give back to you. Any country that GDP is going strong, or GDP is rising, definitely the currency is going to be rising. That is the truth. When the currency is when the GDP is very strong, the country economy is going to be strong. About housing, export, different things about that country, as long as the GDP is very strong, the currency of that country is definitely going to be strong against any other currency as well. Now, how to trade GDP? How do you trade GDP product? GDP analysis is released on the last day of each quarter. Remember, I told you it's not just knowing the fundamental forecast. You also have to know how will you apply them in trading. It is released on last day of each quarter. So for all of us who come to our platform, when you go to Forex calendar, you will see the date when GDP are released. For example, we are using United States as a case study, US dollars. So GDP is released on last days of each quarter. That's every 3 months. The last day, the GDP of that country is possibly going to be released, and the time of the release is approximation of 1:30 p.m. GMT. Exactly 1:30 p.m. GMT. The report will be out, and now if the report is good, it will be good for that currency. For example, if the GDP is high, it will be a very good sign for the currency. But if the result is negative, that is a bad GDP, it will be bad for the currency. Let's say the GDP is going low, is not going high, is not increasing. That country's currency is definitely going to be bad. It will be bad for the currency. Now, for example, when you have a positive GDP on Australia, it means that Australian USD will rise. When you have a positive GDP on Australian dollar, for example, it means that it will rise. That means when you want to trade it on forex market, you could buy Australian card, Australian chef, Australian USD. You have to place a buy there because Australian dollar is rising and the GDP rate is high. That's why I say positive GDP is good for the currency. Negative GDP is bad for the currency. So when you have a positive GDP on Australia, it means that the Australian currency is going to rise. Then when you have a negative GDP on Australia, it means that the Australian currency is going to fall. Then if you want to apply it in trading, you come to Australian Canada, Australian chef, Australian, or any currency paid with Australia, which Australia is the base. Then you place a sell. Someone may ask, how will I place it? You know, Australia here is the base. Australia here is the base. Australia here is the base. Then Australia here is the base. So when the base currency is strong, the market is going to rise. When the base currency is weak, the market is going to sell because the counter currency is definitely going to take dominion against the base currency. If you check our previous video, you'll be able to watch, see how we analyze the difference between the base currency and the quote currency. So it will help you to understand when you have a release of any economic indication or indicator, you'll be able to know what to do, whether you should buy or you should sell. Now, let's go ahead for the next factor. The next factor is one of the most common, most popular economic factor called non-farm payroll. Non-farm payroll, American non-farm payroll. Now, what is non-farm payroll? It is the change in number of jobs gained in previous month. In United States, every month there used to be a release of total number of people who earn jobs and total number of people, total number of jobs gained in the United States. So total number of jobs gained in the United States is a very strong economic indicator. Now, this report is released every first Friday of the month. This report comes out every first Friday of the month, and the time is about 1:30 p.m. That's 1:30 GMT. This is 1:30 p.m., 1:30 GMP in the afternoon. And now, when there is a positive result, it is good for the currency. And when there is a negative result, it will be bad for the currency. Remember, non-farm payroll is a change in number of jobs gained. So assuming this month, more people gain job than last month, that is a positive result, and it will be good for US dollars. If this month, more people lose job, there's not much job gain, or number of job gain decrease, that is a bad news, and it's going to be bad for US dollars. Now, positive non-farm payroll is good. It will make the dollar to rise in strength. And now, if you want to apply it in trading, when you come to Australian USD, Euro USD, JPY USD, for example, you place a sell. You place a sell. Why are you placing a sell? Because USD is a quote currency here or counter currency here. USD also is also a counter currency here. It's also a counter currency here. And now, and there is a positive result of non-farm payroll, which is going to be a strong dollar. And since dollar is a counter currency, it means that it will sell, it will have strong impact against base currencies, which is JBP, Euro, and Australia. So you have to place a sell. Then when it's a negative report of a non-farm payroll, it will be a bad news for US dollar. So what you just have to do, is to buy because of dollar will fall, US dollar will fall. Then what you have to do is to buy Australian USD, buy Euro USD, and buy JPY USD. You buy us because dollar is going weak, so the base currency is going to rise against dollar. So you come to Australian USD or any currency that is debased to dollar, you buy those currencies exactly by 1:30, and you could see that this report usually released from the Forex Factory. It could also be released from the different kind of economic calendar forecast, which I'm going to show you at the end of this class or at the end of this presentation. Now, another factor, which is factor number 3, is unemployment rate. It is also a higher impact news. The key focus is still US dollars. That's what we're using to analyze now. These are the 3 factors that affect currencies, and it's also a higher impact news. Now, what is unemployment rate? It is change in number of unemployed people during the past month. Change in number of, it is total number of people who gain jobs. Now it is released every Friday of the month, exactly 1:30 p.m. the same time non-farm payroll is released. Now, a higher rate of unemployed people is bad for the currency. That is the truth. A higher number of unemployed people in any country is bad for the currency. Now, for example, if you have a higher number of unemployed people in the United States, it means, for example, that on US, Canada, or USF, you have to place a sell, because US dollar is going to go weak, which is the base here. And once it is weak, it means that the counter currency is possibly going to gain strength, and the market will drop. So you have to place sell against dollar. Then a lower rate of unemployed, when the number of people who are unemployed are going low, it is good for the currency. When the unemployment rate is low, it is very good for the currency. It's a sign that the economy of that country, of United States, is good for that month. Then it means that currency is possibly going to rise. It will be a rising dollar. Then, for example, when it's a rising dollar, the dollar is going to be strong. You have to come to US, Canada, for example, or USF and place a buy, or you buy any currency that is paid with dollar, and which dollar is the base currency. For example, if you come to Euro USD here, JPY USD here, you have to place a sell, because dollar on Euro USD pair and the Britain pound USD pair. Dollar is the counter currency there. A dollar is not the base. Then let's quickly look at another factor, the fourth one, that can affect economic activities, and that can also challenge fundamental analysis too. The third factor, okay, so there's another factor here I need to make clear for you here. The difference between unemployment rate and the non-farm payroll. Someone may ask, okay, what is the difference? Because they are being released the same time. They're being released the same time and the same day. Now, unemployment rate is record total number of unemployed people, while non-farm payroll record total number of jobs gained. So this talk about people, this talk about number of jobs. That is the difference. So non-farm payroll talks about jobs gained. It could be like 300,000 jobs gained, 800,000 jobs gained. While the unemployment rate, it talks about number of people who lost jobs and probably number of people who are unemployed. So that is the difference. And these two events here has a high impact in the market. It can take a market going one direction for weeks. That is how powerful unemployment rate is and the non-farm payroll is. Let's look at another factor, interest rate. It's also a higher and a long impact news. It can impact the market for a long time. Remember, our case study is still US dollars. When the interest rate of a country is very okay, it's gonna be good for the currency. So the key focus, the body who's in charge of deciding on interest rate of the United States is called FOMC. FOMC means Federal Open Market Committee. That is the body, the central bank body that vote in favor or against the interest rate of the United States based on the economic policy. Now, FOMC vote on interest rate and other policy measure along with the commentary about the economic condition. The economic condition of the United States is what FOMC always stand for, what the major work, the things they will come up with. They want to decide if the interest rate is supposed to go high, or if interest rate is supposed to go low. Now, the outcome influences their vote, either hawkish or dovish. For those of us who are familiar with economic terms, you could know the meaning of hawkish and the meaning of dovish. But I'm also trying to explain it here that if hawkish vote is good for if there is a hawkish vote, it means good for dollar. It means that dollar will rise. Then if their votes come out to be dovish, it means that dollar will fall and it's going to be bad for dollar. So when there is a hawkish vote, any month that the interest rate is released, so it's going to be good for dollar. And if you want to trade it in the market, you come to Euro USD, JPY USD, and place a sell because dollar is good. When dollar is rising, Euro USD will be falling, JPY USD chart will be falling because dollar is a counter currency. So you place a sell. Then when the decision of FOMC on interest rate become dovish, it will be bad for dollar, and on Euro USD, JPY USD, you place buy because dollar will fall. When dollar is weak, Britain pound will be stronger against dollar, so it will rise. The chart will rise. Or any currency that is paired with dollar, which dollar is a counter currency, will rise. It will buy. And when it is hawkish, when it's hawkish vote, any currency that Euro USD is a counter currency will sell. That's all about FOMC. Be preparing your questions. Very soon I will take my time and I will answer some questions. Then let's go further to the 4 factors that affect fundamental analysis. Another factor is retail sale and core retail sale. Core retail sale has more impact. It is also a higher impact news, and we're also using United States dollars as a case study. Now, what is core retail sale? Core retail sale talks about the index goods, index of goods sell within the retail industry, from large chains to smaller local store in the United States. It talks about quantity of goods sell, both on a retail level, on a retail sale, or on a larger sale. Now, the report is released within 12 of new month, every 12 days of new month. Why we said within this time around is it could come out around 15th of the month, or it could also come out around around 12th of every new month, exactly by 1:30 p.m. Exactly by 1:30 p.m. Now, a high retail sale is good for currency. Yes, when there are more retail sales, it means that more people are buying products, more people are getting money, more people are buying things. So it is good for the currency of United States, and the US, Canada, USF, or any currency that dollar is the base we buy, exactly by 1:30. And again, a low retail sale means probably a low retail sale probably means people are not having enough money to buy things they want. People doesn't have enough goods at home. Maybe probably government have not paid salary. Maybe the jobs rate is going down. So it will, of course, give birth to a low retail sale, and it will be bad for currency because people are not buying more things. And now, when there's a low retail sale report by 1:30 p.m., it's going to be sell on a US card, USJPY, or any currency that dollar is the base. It's going to be sold because dollar is weak. Dollar is weak. The retail sale is low. And this event has a fantastic time when they are always released and fantastic date. So it will be easier for any trader who trade fundamentals to be awake and also to be awake within this time of the day and be able to capture the news, know what is the outcome of the event, and know the best decision to make based on the report, either to buy or to sell. Let's check further. The sixth major indicator is also producer price index called PPI. PPI. Then how important is PPI? This is producer price index. And what is PPI? People need to know this. It is measures the price of goods at the wholesale level. Now, look at the key takeaway, something that you need to understand. PPI measures how much producers are receiving for goods, how much industries are receiving, what is the cost of their production. That is PPI. Producers price index, how much they are being sold. Hi, I'm sorry I had a interrupted network. I'm back now. I hope you guys can hear me well. Let me unmute some of us so that I can hear you. Can you guys hear me? Can you hear me? Hello. Can you hear me very well? I want to hear someone there.
We can't hear you.
Okay.
I can hear you.
Okay, you can hear me now. Okay. Were you hearing me before? I hope you guys can hear me very well.
Please go on, sir. I can hear you.
Okay, no problem. So I'll have to mute all of us back so that there will be minimum noise. Thank you so much.
Mute everybody.
Yes. So I was discussing about PPI, Producers Price Index, and what is PPI? It is the measure of how much producers are receiving for goods, and also it is also an important measure for inflation. Now it is released every second week of the month. This report is released every second week of the month by 1:30 p.m. GMT. By 1:30 p.m. GMT. Then a high PPI is good for currency. The currency will rise. For example, Euro USD will fall because if dollar is strong, Euro USD will fall. Assuming there's a higher PPI in United States. The same thing could be said when there's a higher PPI in Eurozone. When there is when Eurozone release their producer price index and it happened to be a higher production rate and a higher production of goods sold, so it's going to be good for euro, and the euro possibly is going to rise. Then low PPI is bad for currency. When there is a low production rate, it's a bad sign for the economy, and it's going to be a bad sign for currency, and that currency is going to drop. That currency is going to drop. And then when a report comes out by this time of the day, and it happened to be a bad news or a bad figure, for example, Euro USD will rise because dollar production rate is bad, or dollar PPI rate is bad. So Euro USD will rise. The reason is that US dollar is a counter currency. That is why Euro USD will rise. And then when it's a good PPI, Euro USD will fall because because dollar here is a counter currency. This is the sixth number, the sixth point of fundamental analysis of today. So let's go further to another factor. Number one factor is a consumer price index. Remember, the previous one was a producer's price index. This is consumer's price index. It is popularly called CPI, and it is contrast to PPI. PPI was producer's price index, while CPI is consumer's price index. Now, PPI measures how much producers are receiving for the goods, while CPI measures the cost paid by consumer for the goods. I hope you get this, my explanation very clear. PPI measures how much a producer is receiving for the goods, while the CPI measures the cost paid by consumers for the goods. So CPI talks about how much consumers are buying a product or are paying, of course, to get a product. And the PPI talks about how much producers are selling their product. Now, CPI is the most important measures of inflation. And the report is released every 15th of every month by 1:30 p.m. too. You know why everything is 1:30 p.m.? Because 1:30 p.m. is the New York trading time. So we are using United States as a case study. So most of their economic reports usually come out by 1:30 p.m. Once the market sessions open, the report will be released. Now it is released every 15th of the month by 1:30 p.m. And the high CPI is good for the currency when people are buying more, and the low CPI is bad for currency. I mean, when the report is out, you can see the figure. If the figure is good than the previous one, is good. It means that there are more demand of the goods in that country. People want to buy more, and once people are buying more, it means that there will be more demand for people to be looking for the currency to buy more, and the currency price will be rising. And the way it is, we have a low CPI rate, it is bad for currency. It means that the currency will fall, and the reason will be that US dollar will fall against euro, pound, and every other currencies. And for example, if you come to euro and pound, you have to buy. While here, if you come to euro and pound, euro USD, JPP USD, you have to sell because of dollar is a counter currency here. Now, let's check the next one. Next one is trade balance, which is very important factor. It's also a higher impact news, and US dollar is still remain our case study. Now, if you see my diagram here, you can see that it has to do with a measure of difference between imported and exported goods. So you can see trade balance has to do with total number of goods imported and total number of goods exported. For example, you can see that you can see from this diagram United States and EU trade balance. You can see that here the EU export about 407 billion euros, and they import about 268 billion. So they export more than they import. United States and the EU trade balance here, you can also, okay, the same measure here. Then you see the yeah, okay. You can see that the difference here, you can see that United States have about EU has a difference of let's say a trade surplus of 139 billion euro. They have a surplus of 139 billion euro because what they export to United States is higher than what they import from United States. Now, with this analysis now, it is good to have more export product than import product. It is good to have more export product than import product. Now, low export product is bad for currency. Low export product is bad for currency because when a country is not exporting more, they doesn't have anything they are producing that they can export to other countries. So their trade balance rate will be dropping, and it will be bad for the currency because people won't demand for their goods anymore. And for example, Euro USD will buy. Euro USD will buy. For example, if America is having low export product, it will be a bad news for the currency, and the Euro USD will buy. For example, here you can see now United States and the EU trade zone, Eurozone has higher rate of export and than what they import from United States. Now, assuming United States is having a lower rate of export, and meaning that they import more than they export, it will be bad for currency, for United States dollars. And on Euro USD, if you want to apply it on a trade, you have to buy Euro USD because of the trade balance rate is bad. Then higher import product is good for currency. It means that the currency will rise. When the currency is exporting more, when people are coming to the country to buy more goods for export, it is a very good sign for the currency, and the currency will rise. For example, Euro USD will fall because dollar is rising because the United States is exporting more. It's exporting more than the import. Now, the reason why you should buy Euro USD, because if you fall, you have to sell, and sorry, the reason why you should buy Euro USD because the market has to fall, and you sell Euro USD because the market has to fall here is because USD is a counter currency. When dollar is strong, Euro USD will fall, but when dollar is weak, Euro USD will buy. And when there is a higher export product in United States, it is a good sign for dollar, and dollar will rise. So if you want to trade the market on Euro USD, for example, you place a sell order. You place a sell order. Then when there is a low export product in United States, it means that United States are not exporting more goods. It will be bad sign for currency. It means that dollar will go weak. Dollar value would fall. And if you want to apply it in your trade on Euro USD, you place a buy. On Euro USD, you place a buy. Now let's go back to. Okay, I think this is the eight major factors of trade balance. Let's go back to my next slide. Okay, now this is all I have on fundamental analysis. Of course, there are many. For the sake of time, I don't want to take much of your time. I just want to make it brief. We will take this video down together. We'll put this video together and find our way and publish it on our YouTube channel, so you can subscribe to the channel and you may have your time to download it there and watch it over and over again. Then let's go for other factors here. Let me go on. Let me take us on trading. Now, this is the chart. Let me check what all of us are watching there. Sorry. Let me share more screen with you. Now, this is the chart. This is the chart. This is where you see all that I'm explaining to you. Like today, we have trade balance. This is we have trade balance on euro. What is the time now? The time is okay. By 10 a.m. this morning, there's a trade balance on euro. You could see, and they will give us the report for February. You could see trade balance on euro. By 9 a.m., which I just passed, there was current account. So this is one of the things that we just discussed now. And by 10 a.m. in the next, let's say in the next 30 minutes, they're going to be released on trade balance on euro. So if you want to check those economic calendar of what we have discussed so far, when you come to the platform here, you go on calendar. You can come to the calendar of that day and check if there's anything similar to what we have discussed so far. You can see so many of, look at producer price index. This is PPI. This is on Denmark. It should be Denmark currency. We have producer price index here, and it's going to be out by 7 p.m. Then we also have this is the one for month, producer price index for the month. This is producer price index for the year. It's going to be out by 7 p.m. So, and again, we're also going to have trade balance on JPY, Japanese yen, trade balance. It has to talk about total number of import and export goods on Japanese yen by. Okay, we have had this one before. We have had this one. This is in the midnight during the Asian market. So, and the impact here was a medium impact. So we have to go back to the chart to analyze this chart to know what was the outcome of trade balance on US. On JPY, for example, let me check US JPY here. US JPY. This is US JPY. Let me bring out the chart here. Open chart. This is US JPY. And let's check today Monday. Trade balance on euro and trade balance on okay. The report was bad. Minus 9, minus 0.19. That was the report on trade balance on Japanese yen. So it was bad, as you can see from Forex Factory here. The report was bad, and let's check what is happening on their chart. Their chart is loaded now, and from what I can see here, I can see that Japanese yen is weak because of their market today is. Let me check from top market sentiment, top movers. You can see that Japanese yen is weak. The currency is rising. It's rising here. US JPY is rising because the outcome of the outcome of trade balance on Japanese yen in the midnight. The outcome of trade balance on Japanese yen in the midnight was negative. It was negative. So, and the market, as you can see today, is rising. Let me check if my chart has opened my chart. As you can see today, this is a 1 hour chart. Let me check, put it on daily chart. You can see what is happening today. Daily chart. So, as you can see today, the market is rising. This is US JPY. And the outcome of trade balance is negative. So possibly here may be the final a powerful support for Here will be a powerful support for UJPY. Based on the outcome of the trade balance, the market has really gone up because the report was negative. Then by 10 p.m. By 10 a.m. today, you are going to have a report from EU, the same trade balance. So we'll check what's going to be the outcome of trade volume in EU, if it's going to be negative or going to be positive. So anything that's become the outcome, we determine if Euro USD, for example, if Euro USD or Euro JPB is going to fall, like Euro JPB, Euro USD, where's Euro USD? Let me bring Euro USD to the chart. Euro USD, let me bring it to the chart. Euro USD, look at Euro USD. Let me bring it to the chart. Open chart. Whatever that's going to be the outcome, we determine on any currency that is paired with euro. If the trade balance outcome is good, euro is going to rise against every other currency, and if the outcome is bad, euro is going to fall against every other currency. May I know if I can take some question? Do you have any questions so far?
That was the. I think that
Any
was
question? Let me take some questions now. Any question?
Actually, the client who came back and said we just spoke.
Okay, ask a question.
Those three. On those three states, yes.
Any question?
I'm in a meeting, please. Go to the parlor where you reduce the volume. I have a question. Yeah, I have a question.
I can hear you.
Okay, ask a question.
Yeah. So I don't know if we spread, because I know those whatever's on lockdown, yeah.
Can I ask my question?
Yes. And would you ask a question?
Okay, I want to know
the idea was
how long will the
effect, and then snowball,
of this result be in the market in terms of
which of the results?
Are you saying that Ops suggested that we cannot
4-hour effect
do
or
that sample
daily
in those
effect? I just want to know the duration of the
because of
the
Are you Emmanuel? Are you Emmanuel?
many.
My name is Ehis.
Okay, Ehis. So
Other regions.
sorry. Let me minimize the noise. I will allow you to talk.
Mic now.
Yeah. Okay, I don't see.
Okay, I will allow you to ask a question. So you can ask a question now.
Okay, thank you. I really enjoyed the class anyway, but my question is on the market, for example, if the result is out, say 130p impact.
I didn't get you clear. What do you ask?
Possible particular news, and we are buying, how 1 hour, 4 hours, or that kind of thing. So I want to know before we end the trade.
As you can see, which is it? Trade balance report or interest rate? Or
anyone.
No. For example, let me give you an example.
Anyone, sir. Anyone.
Yes. See, this is technical. This is fundamental. Fundamental has no respect for technical. Fundamental has no respect for technical at all. Now, for example, let's say interest rate. Interest rate report can have a strong impact in the market. It can last for weeks. Are you with me now? Interest rate report now can come out, for example.
Serious?
Yes, on euro. That's where you can see a very serious buy. For example, you may see a very serious buy that will last for days. Like this is a chart. You can see that there was a buy 1, 2, 3, 4 for more than 15 days. Only interest rate. If interest rate is good for this month,
yes.
So it can take dominance in the market for long. Now, there are those ones,
Okay.
you know, we just picked about 8. There are about 10 or 15. But not all the economic
Yes.
events impact the market
Okay.
heavily. So these are the major ones that impact the market. Interest rate
Okay.
can take the market for a long time. For example, if interest rate of this April is good, so you can't expect it to impact the market only 2 days. It's going to take a very long period of time. Now, within that period of time,
So,
there
okay,
could
sir.
also be a little reaction of sell or buy based on the direction of the market, but it will take that market for a long time. Yes. Then.
Okay. Thank you, sir.
Okay. Another thing that impact the market heavily is also consumer price index. So
Okay.
when the number of people who are buying goods is increasing and there are millions in that country, it may take that market for weeks. It can take 10 days. It is still increasing because there are more people who are willing to buy. For example, if COVID-19 ends now, consumer price index is possible to increase. I think you know that.
Yes, sir. Yeah.
Yes, one COVID-19, because of more people will come out to the streets, open their shops, many people will start buying many things that they have lacked for. So consumer price index,
very high.
Yes, will increase, and this impact can take the market for weeks. It can take the market for weeks. Yes, so that is why most technical traders lose money a lot because of unable to understand fundamental. Because fundamental has to do with proper education. Technical is all about more of prediction of the price and prediction of the chart, trying to know whether it's rising or it's falling. Just be buying based on chart movement. So you may not need much education to be a technical trader. But fundamental trader, you need more proper education to understand fundamental events that can cause reaction in the market. I hope that is clear, sir.
I understand, sir.
Yes. So I have another question. Somebody raising up his hand.
Very clear.
Any other question? You can raise your hand. Let me unmute you because of the noise is too much. I can't unmute everybody. Chitana, let me allow you to ask your question. Chitana, you can ask your question now. Chitana, let me allow you to ask a question. Chitana. Chitana, can you hear me? Chitana, let me unmute you. Chitana, ask a question. I can hear you now. Hello.
Okay. Yeah, I can hear you. My question is this: based on the GDP of the countries, like US and Euro and the European Union, what about if US releasing their GDP and Europe is also releasing their GDP, and they want to trade Euro USD? How can you compare what will happen between these two GDP if they are releasing, if they both of them release?
You know, one thing is that they are not released at the same time. Are you with me? They're not released at the same time. We use the United States as a case study. The GDP is not released at the same time, and it's not possible to be at the same figure. Hello, are you with me?
Yeah, I'm hearing you. I can hear you.
Now, for example, now if United States GDP is 2%, and the Euro GDP is 3.5%. So you could see that Euro is higher, will be higher in GDP than United States. So on that note, Euro currency is possible to be more stronger than dollar because of the GDP cannot just be the same figure. So it's not possible for them to be the same percentage or the same trend, and they're not going to be released the same day or the same hour.
Okay.
Yes, and so now even if the GDP of this country are released the same day, I don't think it can be the same figure. So you check the one that has a higher figure and trade it against the one that has a lower figure. And the GDP is one of the strongest economic indicator in forex market. Gross domestic product. You don't joke with it. You just have to know the GDP of that country per month if you want to be a very good fundamental trader. And the fundamental is the reason why technical traders are not doing well. because the fundamental can just come and scatter all your plans, nullify all your strategies and nullify all your resistance and all your support. That is fundamental.
Okay.
Any other questions so far?
I know, I got this one. Thank you.
Okay. Any question? You can raise your hand.
Thank you.
Let me ask you some. Let me answer some question. Any question? We are about. We are many here. Some of us may not be familiar with the use of Zoom. Let me try to unmute some. If I can hear you, I will be able to identify you and answer your question. So, any questions so far in the house?
One cup, one cheese.
Any question?
Yeah. Go and call your mother. No.
Okay. There's no question so far. Okay, no problem. So if you have a question, you can raise your hand. I will be able to answer your question as I proceed. Now, let me tell you other factors that for those of us, there are some added services that are put on CCI that's called multiple account management. It's a very trusted solution that allows portfolio managers to manage multiple accounts for the client. And it's also a higher performance platform that allows you manage account with one interface. Then thousands of accounts can be traded with just a second click, and profit and commissions are distributed accordingly. So this is an added services to the CCI company. They asked me that I should let you guys know about it during the webinar. I promise to do that. So you can as well take part of this program. For those of us who may be learning, you can register as a MAM manager. You can become a MAM account manager, or you can become a MAM account follower. So what you have to do is to open your account. If you don't have an account, you can open an account, deposit to your account, and connect your account to a MAM manager. Then for you to be a MAM manager, all you have to do is to you must have to send a statement of account that has to do with 3 to 6 months, not bank statement, and a trading account statement that shows that you're a very good trader. That has to do with at least minimum 3 to 6 months. Then a trading license or legal opinion may be required if you are operating from a jurisdiction that requires regulation. Then all your clients must complete a power of attorney, authorization, and risk disclosure. Here, all your clients must complete a power of attorney or authorization and must complete a risk disclosure agreement. So these are the features of a MAM platform that is okay for traders and clients. You have unlimited account and deposit. You have a micro and standard lot size. It has a fast execution of order and ultra-modern classic trading platform. All market orders are accepted, such as trading stop loss, take profit, and others. The professional trading platform display to your client and the access to set your profit or commission sharing formula daily, weekly, or monthly. Then you have ability to add or remove account without affecting other trades and other accounts. Then real life market watch, windows, and price quote with MAM trading platform. You also we allow your client to monitor your own trade on real time. The solution to it, you can put expert advisors and other stuff manually to the market, and proportional by balance or equity. So this is added new services to the CCI group of companies that they asked me I should let you know about it. For those of us that may want to get access to the platform, it is here. Those of us that want to have a trading account, it is here. Those of us that may want to log in, it is here. Remember, there's also ongoing promo going on with the company. You have access to about 50% bonus. I'm trying to load the platform. You have access to 50% bonus. While it's loading, let me go back to some chat analysis. Okay, it has gone. You can have access to 50% deposit bonus for trading. For those who are coming up, you can have about 50% bonus to help trade. Then when you make your first deposit, you have access to 50% bonus from between a retail account of $50 to $2,000. So you can apply it at any time once you come in on board, and MAM account also can also receive a 50% bonus. Then for more information, you can as well sign up on trading. I have a request here. Let me check who's on my listen. Please, is it possible to make the training PDF and share or further reading? I'm having challenge on internet. Yes, you will check the video. You can check the video on YouTube, on our YouTube page. You can check the video. You can check the video on YouTube page. The video on the YouTube page. Unfortunately, this is a video program, a video class, so it's not PDF. We can't convert old video and video recording to PDF. So we publish it on a YouTube page, so you can go there and download and watch it over and over again to be able to understand what we just said. Now, from the trading of today, you can see the analysis here that Euro USD is rising seriously. It could be that what is time now? Okay, it's after 10. It could be that the trading balance is favoring the United States. So that here is a very strong buy position. So you can buy Euro USD. You can as well buy JPY. Let me remove some charts so that I'll be able to see very clear. You can buy Euro USD here. Let me have my buy position, Euro USD. Let me buy Euro USD. You can buy Euro USD here. You want to buy, select your lot size. Let me buy Euro USD. So it's a very good time position to buy Euro USD. Order is executed. I just place a buy now on Euro USD. Let me set my stop loss. Let me put my stop loss. I'll test stop loss about 100 pips. About 100 pips. Let me stop loss 1.073, 1.07, 1.07. I'm having a very bad internet. It's connecting now. I'm sorry. I wanted to have my take profit. Let me log in again. I have a buy. Of course, it's already gaining here. I'm gaining about $32. So let me put a stop take profit about 1.07302. My stop loss 1.07302. 1.07302. Then I apply my stop loss. Then we'll continue on the chart. For those of us who are on Signal Group, I will send more analysis there, and possibly those of us who may want to trade the market, those analyses can participate in them. Any other question? I think we have gone so far. Any other question? Another question? I think we have gone so far here, and I will end the meeting here by. Any other question so far? Any question? So I would like to end here today. We'll continue next time, and I will post some analysis for you on the chat, so you can be able to join. So you raise your hand, Jackson. Jackson, ask a question. Hello, Jackson. Jackson. Hello, Jackson. Okay. Thank you so much. Bye-bye.
Mute that mic now so that you can hear me. I hear me.
Can you hear me?
I can hear you now, Jackson.
Okay. I want to find out if CCI time is the same with GMT.
Yes.
Section opening.
The time here is the same time with GMT, not
the same time?
Not the same time with New York.
Hello?
I can hear you. I can hear you. Yeah, I can hear you. I can hear you.
Good. Hello?
I can hear you. I can hear you.
I said, is CCI time the same with GMT, as in if we are in hero section now, maybe 7 to 8 opening market time. Is it the same time with the same time? Okay. Thank you.
Yes.
Okay.
Okay, any questions so far? Okay, that's all for today. I wish you best of the luck and happy trading week. Also, make sure you stay safe with your family and your loved ones. Thank you. Bye bye.